JJ the CPA here. Hope you're doing well. What payroll costs do you include with your PPP forgiveness application? I'll tell you what, since the PPP Flexibility Act and it's 24 weeks of payroll, it's this simple. What was the payroll that you had during the 24 weeks, and submit that. Now, for some of you are like, well, that seems like an obvious, that's what I've already done, and that's great. There still seems to be a number of emails and questions that I'm getting, which is the thought process that stemmed from what the original PPP rules were out of the CARES Act, which was, here's the money that you got, show us how you spent that on payroll. Well, after PPP Flexibility Act, you're going to have way more payroll, most likely 99% of you, than what's even needed for forgiveness. Why? Because you have payroll for 24 weeks to meet the number. Where when you got the PPP, it was based on 2019's payroll. It was a monthly average times 2.5, which in essence is 10 weeks worth of payroll. You had 24 weeks now to actually spend it. But the way that the SBA has indicated it, it's really actually fairly straightforward, which is what was your payroll during that payroll period, and then hand that in. Now, of course, there's some specific documents to provide to substantiate that, and payroll tax forms that go along with that. Paid and incurred is key, but it's not as crucial as it was when PPP first came out, and here's why. When PPP came out, it talked about paid and incurred. I did a number of videos on this early on. The paid and incurred then was further explained and simplified in the SBA guidelines, and related to that, I will put a link in the body of this video to the SBA FAQs where they give you some great examples of how this worked. But it's paid and incurred, and per the examples, basically whatever's paid during the 24 weeks, you include. So even if there was a payroll amount that was incurred before you got the disbursement on PPP, but paid after the date of disbursement, you just include it all. Doesn't sound potentially like, well, is it? It is. In the SBA guidelines made it super clear. So if you got the money on April 10th, and then you do a payroll on April 12th, and it includes a prior year period, obviously. It doesn't have to even be the immediate payroll period, but it gets paid, you include it. Then you're including, in essence, 24 weeks. If, for some reason, you need more payroll than you can pick up in that period, right? So if you go, well, here's what I paid, 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 add it all up. And if it's still not enough to achieve the 60% requirement or to achieve full forgiveness, and you need to go to the nth degree to gather up the payroll at the end, then the incurred part is whatever is paid, right, during the payroll periods, during the covered periods. There's going to be some payroll date that it's the last one that was paid in the 24 weeks. So from that date of that end of that payroll period of the last one that was in the covered period, right? So you have all these payroll periods. You're at the end, you're getting near the end of your 24 weeks, and you go, oh, this was the last payroll paid inside the 24 weeks. Well, there's going to then be some amount of payroll incurred between that date and the actual end of your 24 weeks, even if it's paid after the end of the covered period. But here's the thing to note. You may not really need to worry about that, because if you add up all these other payroll expenses and it equals out to at least what you need, you wouldn't need to go to the nth degree and figure out, well, how much was incurred at the end, even though paid after, to include that. Just saves time. Now, with the payroll costs, it is 24 weeks. Now, that's for employees, and the starting number is 100,000, meaning it's not more than the annualized amount of an employee at 100,000. So if you have an employee and they're making 250,000 a year, well, that figure is going to be, 100,000 divided by 52 weeks times 24. That's the max amount. but it has to be what was actually paid and incurred if you're going that route at the very end. And then for the officers in the same FAQs, so for officers, owners of an S corporation and a C corporation that own 5% or more, this applies to them. It's their wages paid in 2019 divided by 12 times 2.5. But those wages actually have to get paid during the covered period. It's not just simply, well, what'd you pay yourself last year divided by 12 times 2.5 with a max $100,000 start. It's going to be, okay, it's that figure, but what did you pay yourself? If you paid yourself more, it's only going to be able to be included, which is the $20,833 of what you actually had for 2019. So let me state another way. If for the C Corp owner and the S Corp owner, if you paid yourself $200,000 last year, okay, well, you're only going to be able to use $100,000 of it. You're going to go 100,000 divided by 12 times 2.5. It's 20,833. But if this year you paid yourself nil, you paid yourself nothing, well, you don't get to include payroll costs for yourself because you didn't actually pay them. So for the S Corp and the C Corp, 5% or more owners, that is the calculation, that is the max. Here's the difference between the two. So the S Corp and the C Corp, in addition to those payroll costs, the amount of retirement that was paid by the business is included in payroll costs, in addition to the wages, gross wages. Now, for the S Corp owner, they don't get, in addition to that, the employer paid health insurance. And the reason for that is that the health insurance under IRS law is already supposed to be included in the wages. Therefore, that is why it's not an add-on, because it's supposed to be in wages. And it specifically says that in the SBA FAQs. Now, for the C Corp owner, they get that retirement amount that's paid by the employer, their business, as well as the health insurance that is paid by the business. And the difference is, and the reason why, is that for a C Corp owner, the health insurance paid by the business is not included in the employer wages. Now, for the partners, the partnership, you'll take the 2019 Schedule K1 self-employment earnings, and here's a little twist, but it's 2019's amount, no more than $100,000, divided by 12 times 2.5, that's 20,833. But for the partners, you have one extra step. It's that figure times 92.35%. Why that? Well, it's to cover or offset half of the self-employment tax calculation. Doesn't make sense to me, but that's the calculation. Now, for the Schedule C, Schedule F, which is your sole proprietor, your self-employed, your gig worker, your independent contractor, farmer, rancher, you take 2019, line 31 for the Schedule C, and right off the top of my head, I don't remember the net income for Schedule F, but it says net income. You take that amount for 2019, no more than $100,000, divided by 12 times 2.5. That's what's included for those self-employed individuals. Now, for the employees, going back to them, no more than the $100,000. Know this: there is no look back on employees. It's just, what did you pay the employees during this period of time? And then for the employees, the payroll costs includes as well anything that's paid by the employer for health insurance and for retirement benefits. If they're on the health insurance, some of it's paid by the employee by being withheld from the paycheck, then you do have to make sure you're only including the amount of health insurance paid by the employer. And then in addition to all of that for payroll costs, you get to include the state unemployment taxes. So the one thing to be clear about is that the employer payroll taxes, the 7.65% for Social Security and Medicare, the employer's portion of payroll taxes is not included in the payroll costs. That's a little bit of the rub, because the employers that took PPP to then pay their employees, well, they still end up having to pay that tax on top of it, 7.65%. To be clear, this has nothing to do with the amount of Social Security and Medicare withheld on wages for the employee. That's only the employer portion of payroll taxes that's not included. All right, hey, I got 2 seminars coming up early January. Got a link to it. They're meant for you to come, bring your documents. I'll send you a list before the meeting with plenty of time for you to gather these up. And the purpose of the Zoom, different from my videos, because I'm still giving out all the information that you need in my videos. But with the Zoom, bring the list of documents that I tell you to. It's a group Zoom. We come together. We go step by step. Here we go. And at the end, the goal is that you have your PPP forgiveness application complete. I've got one for the self-employed and one for the employers. In my opinion, nominal fee compared to especially what others are charging. So hope to see you then. I'm 1 day for self-employed and only 1 day for the employers. I'll be into tax season. I'm not sure if I'll do another round of these. So get signed up. The last seminar I did sold out within about 4 days. So go to the link in the body of this video to check that out, right? All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me.